Good day, ladies and gentlemen. In this video I want to teach you a strategy that works on all markets. Okay, so it doesn't matter if you're trading forex, okay, it doesn't matter if you're trading forex, crypto, or stock. Okay, this strategy is going to work for you. The only problem or downside of this strategy is that you might have to take fewer trades. Okay, so what's the strategy about? I call it the turning point strategy. Okay, turning point strategy. So you basically look for price moving in a particular direction, then you wait for the price to change direction. Okay, so that point, that pivot point where it change direction, that's where you'll be waiting to take your trade when price comes back there. Okay, so when price returns back to the level, you want to wait to see the way price is going to react, okay, at that particular level. Then you can frame an entry position, okay, around that region in order to capitalize in the move, probably to the upside or downside, depending on if you're looking to sell or if you're looking to buy. Okay, so this I have some examples for you. Look at this. So price was moving in the upward direction, okay, giving us higher highs and higher lows. Then it got to a certain point, then it started moving the other way around. So this is my pivot point where I'm going to be placing an horizontal line and wait for price to actually return there. Okay, so look at that pivot point right here. Okay, so when price returns there, I want to see the way price is going to react, then I'll take advantage of it. One thing you can do, you can go down to lower time frame to frame your entry, or you can enter on the particular time frame you're doing your analysis. Okay, so you can see what happened. Price goes back to the level around here. No, it didn't really touch it. It didn't touch it there. Okay, this is where it touched it. Okay, so it touched it there, and what did we have? We have a downwards movement. All right, something else you can do if you don't want to miss trades. If you don't want to miss trades, something else you can do, it's not compulsory you do this, but something else you can do is you can decide to use the last bullish candle. I think that's a doji there, not really a bullish candle. Or is it bullish? Let me zoom in. Okay, it's a doji, but it's having the body has a bullish color. Okay, so you can use this particular candle. Okay, you can frame a region around it like this. You can frame a region around it like this, or you can put it close to this small body that it has. Because most times when you have a doji like candle, price usually want to get at least to where the body of the doji is. Okay, the small body of the doji, price usually wants to get there. So you can do this, or you can decide to just use the extreme level. Okay, so assuming you did that, probably you would have been tapped into the trade right here. Okay, you would have been tapped into the trade right here, of which you would have made money instead of waiting for the price to come back to the level again the second time. Okay, so if you are using the extreme level, this is where you would have gotten into the trade. But if you are using a zone, you treat that area like a zone by creating a zone around the last candle that formed the pivots before price started moving down. You would have entered the trade a little bit early. Okay, so I think that's my first example. Let me zoom out a bit. So this is my first example that I've given to you. No, this is the first, and this is the second, because this is like a pivot point also, because price was moving up in the opposite direction, and then from there started moving down. So there is also a level here if you want to use this. Okay, so this second level is what price tapped into here. But if you missed this one and you didn't know this is a level, no problem, you would have made money with the first instance. Okay, with the first trade idea. So I have one more right here. Look at this. Price was moving up, then all of a sudden started moving down. Okay, so this turning point is an important level from which price could react from. It doesn't work every time. You don't need a strategy that works every time. You only need a strategy that works at least up to 50% of the time. Okay, then you apply your proper risk management. You already know the calculation, you understand the mathematics. If you are using a risk to reward ratio of 1 to 2, okay, You only need to be correct 40% of the time to be profitable. Okay, so if you're looking for 100% strategy, a strategy that is up to 100%, it simply means you have not really understood what risk management is, which is a very important part of forex trading. As you can see, price um price did not get to the level. Okay, if you're using the extreme right here, it would have missed the trade. But if you kind of carve out a zone from it like this, it would have been tapped into the trade right there. Okay, so it's best you use the zone system instead of using the extreme. So if you use the zone system, because most times if you're using an horizontal line and you're just treating these levels as just a line, sometimes you miss out on trades. But if you treat the level like a zone, most definitely you get tapped in. You know, you use proper risk management. Make sure your stop loss is above or below the zone, depending on whether you're buying or selling. So basically, that's just what this strategy is all about. It's a very simple strategy, and if you're finding it difficult determining where to use as your pivot point to trade from, what you can do is most of the pivot points that actually make sense, okay, that hold water. Most times, those kind of pivot points usually have same color candles, you know, moving into the level, and same color candles coming out of the level. Okay, so you can use that one to sieve your pivot points that you choose. Okay, you can see the ones I choose. You would notice that we had same color candles. Look at these, same color candles going into the zone, then same color candles coming out of the zone. It's just a way of ensuring that there is momentum, okay, in that level. Same thing here, look, you had same color candles going into the zone, then same color candles coming out of the zone. So that can help you get an idea of which zone to actually use and which to ignore. But most times it's always going to be around the turning point from uptrend to downtrend or downtrend to uptrend. Alright, so if you got any value from this video, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.